I think the time is very important for the Fed decision. As we know, the 4 years is not a short time because the global market has enough patience to wait to this time point. As we see that the economic recovery in the United States is still uncertainty. That's why I think the Fed, considering that there are more driving forces, especially in the monetary policy, to have more positive policies that to support the economic recovery. This is the very important time point. As I understand, now the American economy is coming to a crossroad. To the left will be the lower inflation. To the right, the inflation will still remain, could be high, or including unemployment. So this crossroad made the decision that very probably that in the benefits of the economic recovery. So we see the timing is right and a little bit too late, but still good enough that the necessity for such interest cut, that will have more confidence for the market. I think 50% because of the time, because they have already, as we mentioned, that delayed such a interest cut. That's why that in order to have more secured that impact of this cut, so 50 basis point is quite reasonable. 25 after 4 years waiting, I think is too small a step for the market. So I think the Fed made a right decision that 50% or 0.5% of the interest cut is quite to meet the demands of the market, because as we know, if 2 years before we made such decision, the 25 basis point is good enough, but nowadays 50% is still available for a new interest cut in the future. So I think the 50% is good enough. Actually, there's no actual right policy that can prevent any possible recession, because we need a lot of other additional jobs and policies, not only the interest cut. Your interest cut is only one important thing that to counter the inflation or unemployment in order to lower the borrowing cost for the market, give more confidence of the buyers and the consumers. But if we want to prevent any recession, we need another more industrial policies to support the manufacturing, the real economy, and other sides. But actually, this is a very important and positive policy to have more efficient, to make this whole general picture will be improved, because the market need more policy to support, to have more confidence at the moment. The confidence shortage is the major power for the United States, also for the global market. So this move has really improved the expectation of the market that the U.S. economy will be much better to recover as people thought.